Hey traders, happy Sunday. This is Ron Haight. Hope you guys are doing fantastic. As always, everything in this presentation is for educational purposes only. All right, this is Thinkorswim. It's a daily chart of the S&P 500 ETF, the Spiders, SPY, and we're bullish. There's no change even from last week's video, except if I zoom in, here we had a high, I said, then we had a high here. Really hadn't set a higher high on a weekly basis, and now we have. It's not by a whole lot, but it has happened. So the idea of this little lower high thing, it's over, which is more bullish. So bottom line, we are bullish walking into this week, which is earnings season, which we'll talk about here in a second. The red line is the 20-day EMA. The orange line is the 50-day SMA, simple moving average, and that is the institutional line in the sand. I'm still going to say we get below that. That's what gives the bears an edge, especially if we were to take out this little mini double bottom and if volume were to increase. Maybe earnings could be that catalyst that breaks us down and causes a correction. Otherwise, the all-time highs as of right now, right back here, are the target. If we take a look at the diamonds, the DIA, now this one's still, we broke this little downtrend line a little bit, but we really haven't set a higher high yet. And by week's end, we are actually lower than where we were on Monday. So here, it's not as bullish as the SPY, but it's really, to me, all about the 50-day. That's what major technicians will watch for. That is what institutions watch for. If we close below there, and the same thing, close below the 50-day in orange, but then take out this little double bottom. The combination of both on a pickup in volume, that would be bearish for the Dow. Now, using the Dow as an example, you would go right back down here to this support area, then gap fill, and then back down here, if that ever happens. If I take you back to the spiders, we break the 50-day, take out this double bottom, and it's not much of one, and you like double bottoms down here, not up here. But you break that double touch point, then you come down here, and then you come down here, and then here. But you guys pretty much know that from the videos that I do each time. Qs, all-time highs, happy days are here again, times 10. There's no problem at all whatsoever. People are going to have this free money forever. And the Qs just keep on going. Here too, the 50-day is the big one, but the first sign of trouble would be something below the 20-day. And right now, that's what we're basically at 264. Here it's 250. We're 14 points above the 20-day. That's a lot. And usually when we get that high, there's usually some sort of reversion to the mean. Here we had a candle outside the upper Bollinger Band, and it stopped us for one day. We closed inside, and then we just start marching higher. Now, we're not outside that upper Bollinger Band yet, so on a day-to-day basis, we're not even overbought on the Qs. It's just that silly. Apple, so goes the market. Apple doing just fine. It is not outside its upper Bollinger Band. It's way above its 20-day. Usually when you get that far away from it, there's going to be some sort of pullback. But with earnings season here, I mean, the positive reports, if they come out less bad than expected, these things could just keep running. So watch the 20-day for the first sign of trouble. Now, earnings season, let me just show you what we got this week. I just wrote a couple things down to help. There's other companies reporting, but these are the big hitters. So Monday morning, BMO, before market open, we got Pepsi. We'll see how soda, how potato chips, Gatorade. My guess is it should be an amazing quarter with everyone stuck at home. Tuesday, the banks report. You got Citigroup, JP Morgan, Wells Fargo, and then you're going to have Delta Airlines as well. So this will give us an idea, hey, how are the banks doing? What does the airline industry look like? It's probably going to be just bloody awful. Wednesday, the banks continue at Bank of New York Mellon. We got Goldman, we got PNC, we got US Bank. Then you get into Progressive and UNH, which is healthcare. Then we got Domino's Pizza. Maybe people are sick of ordering pizza at this point. And then we got JB Hunt, which is going to be transport. You have Johnson & Johnson, discretionary, if you will. Netflix. Is everyone continually renewing now that their trials are over? Another bank, and then Friday, Kansas City Southern, Kansas Southern Railways. Now, if I look at the banks, let's just start with them. Here's Citigroup. They held the 50-day, but earnings, which is a fundamental event, is going to trump technicals. So if we were to gap below the 50-day, then you're going to come back down here towards 40. That could be considerable depending how big of a gap down. If it pushes higher at all, we close at all on Monday or Tuesday higher, then you go right here to this where it just ripped before it came back down to earth. That would be the target initially. The same thing goes for JP Morgan. If we push higher on Monday, Tuesday, then you're going to come all the way up here for a target. We break below these lows, then you're going to come back down here to this bullish engulfing, which is what, 82. Delta, I won't do all the banks. Let's just go to Delta. Same story. This was like this last squeeze, and then look what happened. It went right back down to the breakout point. You saw that with JP Morgan and Citi, the same thing. We had that thrust early part of June, and now we've come right back down to the thrust point. This could be a launching pad for a move higher, but we don't know until that earnings report comes out. So at the money long puts, typically 45, 60 days in time, is a great way to practice in a paper trading portfolio. See how those work. If the stock were to gap down, those puts are going to gain value, usually, especially if the gap down is enough. Those puts will start gaining some serious value. And if the stock gaps up, you're going to gain dollar for dollar with the stock, and the put's going to start losing its value. But please practice these, because if these companies do come out with bad earnings reports, you're going to see the value of them. And I sort of preach that every time we go into an earnings season. Now, last earnings season I thought would be full of fireworks. Not the case. Will this one be the fireworks? We'll just have to wait and see. Actually, I want to go to XLF too. So we did Citigroup, JP Morgan, I did Delta. I want to bring in XLF just for the overall bank picture. We get below here, which is 25 or 22.50. We have a gap fill to 22, and then back down here. So even though we switched to an ETF, when we look at banks, it's the same story. All right, what else do we got? I wanted to look at DPZ, Domino's Pizza, which is jumping to Thursday. This stock, in February, it started to get down to about, let's actually look at a one-year chart just to give you some context. So it began to pull back into the February, and then it went ripping higher, which is actually seasonally bullish. It then went up from, think about this, 300 up to 370. That's a huge move, but it was right on schedule, just like it does in years past. Domino's is one of the most seasonal stocks out there. It has different spots of specific weeks where it's never lost in its publicly traded history. That's the power of seasonality. And this was even before the sell-off really got going with the markets. It went up, came down and filled the gap even a little bit more, and now we're right back up at all-time highs. I would say this, though. Is it enough to warrant that kind of major move now over $400? Even with something with Domino's, I'd consider an at-the-money put 45 to 60 days. All right, then we have Netflix coming up with earnings Thursday as well. Now, this one to me, it's such an acceleration, it's such exuberance, it's the blow off top type move, if you will. We're now spending almost, here we closed outside the bands, there we were basically on or above, and then you get this thing, where we finished up 40 points, 8%, and now we sit here at 555. With that earnings report, if they're not continuing to add subscribers, or people are now canceling because they're back going outside, now, will that be in the report or not? Probably not, but the guidance might tell us, hey, we are seeing more cancellations. This thing could come from here all the way down here in a heartbeat. Do I think so? I have no idea. No one's going to know. We just have to see what the consumer's doing with Netflix. I had a question on DBX, which was Dropbox. Company came public over here. They went as low as, 15? Now they're in the 20s. The 50-day moving average on Dropbox has not been that good, right? We're below it, we're above it. We're below it, we're above it. There was 2 days below it here, but it printed a hammer and we got right back above. Here it was 1 day. We really haven't spent 2 days below the 50-day, or even having back-to-back down days below the 50-day in about 3 months. So what I would say here, if I was trading Dropbox, if it closes below the 50-day, it gets my attention. We get a second day below the 50-day and it closes near the lows of the day and volume begins to pick up, that's what made me say, okay, maybe there's some teeth to this sell-off at this point. Because when we did dip below, it pushed right back up. Here, we put a hammer in, which you're not supposed to really view as hammers near the top of patterns, but it just shows you the thirst for the stock in that low held. So again, for Dropbox, I'd watch for 2 days below the 50-day, and I prefer to see 2 days near the lows of the day. Now, how about Walmart versus Amazon? Walmart is surging. This was the big day when they announced that it's the Amazon killer. They're going to bring out their version of Prime. Stock closed that day, basically 127. We pulled back to 124. Now we're sitting here at 130. Could Amazon, could Walmart kill Amazon? It's just an opinion. Personally, no. There's enough room for both of these. Could it slow Amazon down? Well, let's see. Is it slowing Amazon down? I would say no. It's almost like it just threw gas on the fire. So Amazon now is at $3,200 a share, which is insane because it was just at $16 a share. But Amazon has a much more wider SKU database, if you will, SKU item database than something like Walmart does. These guys, super bullish. Would I buy Amazon? Based on my swing trading, the way I like to teach it, outside the Bollinger Band, basically outside, outside. You're sort of on, outside, outside, outside. You're closing outside. I do not like chasing that kind of price. I prefer let it come back to the 20, let it bounce, and then try to jump on board. Now, Amazon's going to report later this month, maybe even the first week of June. It's usually towards the end of the month, but they're not this week so far. But can Walmart kill Amazon? Only time will tell. Right now, it doesn't seem to be affecting the price of shares at all. So that is it. Overall, bias is with the bulls. We'll take the S&P. Let's see what earnings season gives us, see if companies are going to warn. There's all kinds of negative news out there about the rents, mortgages, people not paying their bills, people not wanting to go to work because of all this free money that's out there. It's not going to be free forever, and this has to be paid back by the taxpayer. And if companies aren't open for business, tax rates have to go up, which we're seeing already here in Pennsylvania locally. There's no revenue because everything was closed. There was no savings by the politicians for these types of things, and that's going to put some pressure on the market at some point. But until we break moving averages, negative news is not mattering at all. We break the 50-day, we close below it, volume starts to pick up. That's what would say, all right, now we need to start paying attention. Maybe finally this negative news is going to gain some traction. Okay, so wish you guys a fantastic week. Oh, and what I might do here is the market just keeps drifting higher. What I might do is do Sunday, Wednesday. We'll do like a weekend video and then like a midweek update on a Tuesday, Wednesday, probably a Wednesday. There's no sense really doing these videos every day when all we ever do is seemingly go up. Maybe with earnings season, we'll finally get some fireworks. Okay, now have a fantastic week, guys. We'll see you in the next video. Take care.